Eric Mwade. In this video, we're going to be taking a look at how you can use the RSI to find simple entry levels in a stock that has pulled back. So this is a continuation of a series of videos that you can find on YouTube. So just go to YouTube and either search for Uniformity or RSI. So this is a series here. Probably this is going to be part 8 of this series. So go to YouTube and just search for RSI Uniformity, and you're going to get the first of 7, and this one is going to be part 8 of this series. Again, we're taking a look at how you can use the RSI to find exact or at least actionable entry levels in a stock. And what you do is, before you watch this video, just make sure you've watched the prior videos. Otherwise this might not make sense, because I want to go through the example here pretty quickly. So what you do is you use the stock's prior history to find the ideal entry level. In this example, you can see that there was a nice move here from about 52 that went all the way to about 76 in a couple of weeks. So what you do is you find the entry level on the RSI, and you can see this is where the RSI started moving. So let me clear all that stuff out. You can see that RSI broke out here, and which happens to be this perfect entry level. So you know that for a fact. So what you do is you draw a straight line from that level like that, and you can see that in this example, every time the stock has uniform action back to the line or that level, it is a perfect entry level. Especially if you are using the chart on a daily chart, then you want to own the stock for a couple of days, maybe for 1 or 2 weeks. You can see what has happened recently is that the stock itself has come back to the same level and is bouncing off that level. So that was at about 71. Now it's gone as high as about 75. So this is a very simple method. I call it uniformity. Why? Because uniform action to this level here and again here. And why is that important? Because it gives you retest of the sentiment or the RSI when the stock had a nice move, and so you use that reasoning to find the next support level in terms of sentiment. Yes, you can see here that also the 50-day moving average acted as support, which is okay, but for the purpose of this video we are looking at the RSI there. So also notice that if we back test the same line, you can see that it also makes sense, because there's uniform activity, double bottom here, which is a short-term low for day trading entry. Extend that, you can see again double bottom, uniform activity each time below the line, back above it there, below the line, back above it again, so which is short-term entry level there. And actually if you extend the same line, it gives you the ideal entry level here when the stock came off the lows, price range there of being about 46. So this is the daily. If we go to the weekly, you'll see again the same situation here. There was a breakout on the weekly RSI time frame there, which is this entry level. So you draw a straight line, which happens to be about the 50 level, and that's okay, nothing wrong with that. In fact, it's a good thing. So around the 50 level, you'll notice that the stock has bounced off the 50 with uniform activity here, back to the line, uniform activity again. So that's an entry level at this point there, which happens to be a nice entry before the stock started moving higher. The stock came again and touched that 50 level, which is this level here, and bounced, and it touched this level here again and bounced since that. So we can see that you can use this for rebound situations when a stock pulls back to a prior ideal entry level on the weekly RSI, just like we've seen on the daily. It makes sense that you can use that for rebound into a stock that has pulled back off its recent highs. So let's go to the monthly. Just want to show you here that I noticed that if you take the monthly by itself without even considering other factors, there was uniform activity below 50 and back above 50, which happens to be this low and this entry. So it is true that if you can find stocks bouncing off the 50 on the weeklies and the monthlies, they tend to be very successful. And the reason why is because 50 happens to be just an area where the bulls and the bears decide which way is winning. And once the market recaptures that level back above 50, you can use that as an entry level. Now, if you go back to a longer term view of this same stock on a monthly chart, you can see that the ideal entry level came off this breakout. So if you take the high there on the monthly, high there, through this high and this high, there was a breakout perfectly here sometime in 09, which was this level here, just under $30. And so there was your perfect entry. Draw a straight line. It also happens to be around the 50 again. You can see that we've bounced off the 50 before, which is a perfect entry level for a pullback. That was a perfect entry there. And also another bounce off the 50 there, late 2012, which is this entry level. And since then, the stock has done well. So you can use this method to find entry into stocks that have pulled back. And also, if you watch the series, you'll realize you can also use this to find short ideas once the method gives you a sell signal. Eric Mwathe, good luck, peace, and blessings.